QURE down 63% roughly. This is Monday, the 3rd of November 2025. Intraday low $11.24. Yeah. The stock is obviously trending as investors react to an unexpected FDA update concerning the company's experimental gene therapy for Huntington's disease, AMT-130. The FDA's feedback appears to delay or complicate the path toward filing a biologics license application, raising questions about study endpoints, trial design, and the strength of clinical evidence supporting approval. The development has sparked a sharp debate across biotech forums, with some traders viewing it as a temporary setback, while others see it as a major blow to the company's flagship program and valuation. Key issues at play: FDA shift in stance. The FDA appears to be taking a more cautious approach toward gene therapies, targeting new neurodegenerative diseases, particularly where long-term efficacy and safety data are limited. This may force the company to collect additional data, potentially through an extended follow-up period of current trial participants or a new confirmatory study to strengthen statistical significance. Timeline pressure: investors are anticipating a BA biologics license application submission this year, but the regulatory update could push that back to up to 2 years, impacting evaluation and cash flow projections. Cash and runway concerns. Okay, the company has historically maintained a moderate cash runway around 500 million to $600 million as of early this year, depending on recent burn. However, delays could increase financing risk in a volatile biotech funding environment. Market confidence: the stock's performance has been driven by sentiment. Traders weighing short-term dilution risks against long-term upside from AMT-130 and other programs in the pipeline. Options left for the company. Okay, regulatory re-engagement: in the short term, the company can request a Type C meeting or formal dispute resolution to clarify the FDA's requirements. It may propose a modified BLA strategy. BLA is biologics licensing application, such as filing for a limited indication or accelerated approval if biomarkers are accepted as surrogates. Strategic partnerships: partnering with a large biotech pharma company specializing in neurology could help fund for the trials and lend regulatory credibility. Okay, potential partners could include Biogen, Roche, or Novartis, which have experience in CNS and gene therapy assets. Pipeline diversification: the company may pivot its focus to it may pivot its focus to its other gene therapy programs such as hemophilia, Fabry disease, or ALS to sustain momentum and de-risk reliance on a single asset. Cost optimization or restructuring: if the delay is prolonged, the company could implement cost-saving measures, prioritizing the most promising assets and extend its cash runway without excessive dilution. Acquisition or merger: that's also another option. Investor perspective and possible scenarios. Okay. Regulatory recovery renewed confidence. Okay. The company successfully addressing the FDA feedback and reaffirm its BLA path by mid 2026. Okay, that will be positive. A prolonged delay, high risk, long horizon, additional trials required. BLA pushed to 2027. Yeah, strategic partnerships secures a co-development deal. Okay, acquisition and M&A failure. That's also another option. Imagine we've already read that out with prospect of merging with Roche, Novartis, and others. Okay, and then failure or program halts hold a salvage value. Okay, FDA or clinical data leads to discontinuation. Yeah. Okay. So bottom line, the company stands at the critical crossroads. The FDA setback complicates the short-term path for AMT-130, but the company's gene therapy expertise and infrastructure remain valuable assets in a consolidating biotech market. So for investors, this becomes a high risk, high reward scenario. Okay, short term believers may see opportunity in depressed prices, betting on eventual recovery or acquisition. Short term traders may look for volatility spikes tied to FDA updates, trial readouts, and M&A rumors and all that. Okay, so back to the technicals. Yeah, that's what we're looking at right now is this plunge. Okay, so no downward projection has been projected. Well, there are some downward projections. 61 point. No, that's actually an upward projection. 61, 61 point. 61.24. Yeah, that's an upward projection. But in any case, the extrapolation is saying that this weakness will remain in place up till Thursday, the 6th of November. Then after that, it may bounce and then maybe begin to consolidate. Yeah, may begin to consolidate. So it's just saying that when it bounces from Monday the 10th of November, then it may begin to trend at a re-rated at the re-rated levels, maybe around there 14.11. So it's the algo sees some recovery, it sees a bounce, but still extrapolating that further weakness may play out. Yeah. Okay, everything is severely bearish. Okay, everything is now severely bearish, totally severely bearish. Okay, so well, let's see what we have on. Let's see what we have. 22.094 million shares have crossed the tape. Okay, let's see how they are trading the stock. Is it optionable? It is optionable. Yes, it is. It is. It's optionable. Yeah, the calls would have been decimated by now. Yeah, totally dismantled. Okay, let's see what we have on the chart. Aggression looks like what we are dealing with, maybe in the interim. Yeah, doesn't look like a lot of. Well, we've seen a couple of millions have crossed the table. It doesn't mean that aggression is not at play. Not that it's not at play. Possibly, surely, aggression surely, is behind this huge plunge all the way down to 11.24. So, mind you, it has actually recovered 100% from those lows. Interesting stuff. It has recovered up to 100% from these lows. So, well, never say never. Never say never. Never say never. There might still be something out there for people to get involved and see what they make of the stock as things stand right now. So yeah, have a look and see what you make of QRE. And thank you very much for watching this video.